Welcome back. What a volatile housing market we have right now. So for example, we have approximately 600,000 fewer homes for sale this August compared to the average August 2017 through 2019. One of the main reasons why we have this shortage of the number of houses for sale is due to a giant decrease of new listings. In fact, new listings this year is well below the past 6 years. Also, houses are taking longer to sell compared to the past couple of years, but they're still selling faster compared to August 2017 through 2020. So in today's video, I'm going to share a brand new report from Realtor.com that was actually just posted on September 1st. This is actually the first housing market update I've seen that covers the entire month of August. Most companies, such as the National Association of Realtors, will not publish August data for another 3 weeks, for example. So I have a lot to share in today's video. And of course, I invite you guys to subscribe to this channel right now because I post frequent housing market updates so you guys can be more informed about our US housing market here. And for those of you who are already subscribed, welcome back here. So let's first talk about inventory levels because this is a new development that's happening right now. So according to Realtor.com, it says here there was 7.9% fewer homes for sale this August compared to the same time frame last year. However, though, here is the big change this August compared to years past, though, because it says in August, inventory did increase slightly over compared to July, up by 3.5%. So inventory levels increased by 3.5% from July through August this year. This is highly unusual because the average July to August growth rate is actually under 1%. That's the average going back to 2017 through 2019. In my personal opinion, the reason why inventory increased at a much faster clip compared to historical averages going back to pre-COVID levels is due to two main reasons. Number one, houses taking longer to sell, therefore inventory is increasing. And number two, according to Realtor.com, new listings saw a significant increase for the month of August compared to the previous month here. And I'll share that with you guys here in a little bit because I have some thoughts regarding that as well. This is a look of the number of houses for sale going back to 2017. This chart here is kind of a mess, but let me just briefly explain because these color codes are the same for all these stats I'm sharing in today's video. So the blue line above here is 2017. The orange line right there is 2018. Red is 2019. 2020 is right there. And then in 2021 is at the bottom. And the orange yellowish line is 2022. And of course, this pink line is this year. So when looking at the total number of houses for sale nationwide, according to Realtor.com, there's approximately 669,000, down 7.9% from 1 year ago, which is right there. But when looking at the average pre-pandemic levels, 2017 through 2019, back then there was around 1.2 to over 1.3 million homes for sale. This means on average, we're missing approximately 600,000 houses for sale compared to historical averages. Also, like they mentioned in their narrative, we did see a significant rise compared to the previous month, which you can see right here from July to August, a gain of 3.5%. Whereas in 2017, for example, inventory levels slightly increased. In 2018, they did increase, but in 2019, inventory levels did decrease compared to July. So this is going to be very interesting to see here what happens because what happened last year, which is right here, inventory levels did not peak until October, highly unusual because it's more normal to see inventory peak in the late summer months here. I would imagine, based on my real estate market predictions here, that inventory is going to peak later in the year, just like it did in 2022. And this is due to a pullback in demand, fewer contracts being signed between buyers and sellers, and therefore inventory is increasing, even though back in 2022, new listings were falling greatly. But I have some news to share regarding new listings though, because new listings actually increased in August, highly unusual as well. In fact, let's just talk about that right now because this is, again, a very unusual trend we're seeing right now. It says here, newly listed houses were down by 7.5% from last year's levels. No big deal. This is a common trend we're seeing here. But this rate of decline is much improved from a decrease of 20.8% in July. So the difference between last year and this year is actually getting more narrow. And that's because last year we had rates more than double in less than 12 months. And of course, a lot of people were locking in rates of less than 3 and less than 4%. And they were choosing not to list their house for sale because they did not want to take on to 6 to 7% interest rate and give up their very low rates. So that's why new listings fell greatly last year. And of course, home buyers as well were faced with record home prices as well. But what's happening this year is that we did see an increase of new listings this August here. It says, however, the count of newly listed houses for sale did increase by 3.5% from July to August. This late summer increase of newly listed houses for sale is seasonally unusual. So look at this. Here is a chart showing new listings compared to previous years here. So this is just really caught me by surprise because I've been telling you guys that I wasn't expecting a surge of new listings unless people start losing their jobs and people are forced to sell their houses. Why would you sell your house if you're not being forced to? I mean, people make their lifestyle decisions regarding that, but in general, I've been telling you guys that I'm not going to see a giant increase of new listings unless rates decrease to about 5.5, maybe below 5%. And that would get some homeowners off the fence to list their house for sale. Or I also can see a scenario in which new listings increase greatly if people are forced to due to losing their jobs and being tapped out on their credit cards, for example. But this is something, it's not a giant increase, but it's something to pay attention to because, again, new listings increase from July, highly, highly unusual because look at 2017, what was this, 2018 and 2019, it's kind of clumped in right here. New listings started decrease in June each and every year there. Back in, what was this, 2017, they did see a slight increase in July, but overall, new listings peaked in May. And that's the same for this year. They did peak in May, but we haven't seen a year in which new listings had this fairly significant increase in August here. So is this a sign of what's to come? Are we going to see more new listings hitting the market, which would increase housing inventory and of course put downward pressure on prices? Of course, I will definitely keep you posted regarding this because I'm going to be very curious to see what September and October looks like because if this starts increasing at a much faster clip here, that's going to be a recipe for disaster. Or if new listings fall again, that of course will cause inventory to remain at historically low levels. Let's also talk about the demand side of the equation as well, because here's a measure of contracts being signed of existing houses according to Realtor.com, because that decreased by 11.5% compared to August of 2022. This is slightly lower than July's 12.6% decrease on a year-over-year basis, and much improved from December's peak, a giant decrease of nearly 37% compared to December of 2021. They also talk about how the gap of pending listings is also getting more narrow compared to last year as well. In other words, it's improving here, even though it's still down compared to a year ago. And I have some thoughts regarding that because, in my opinion here, the reason why we're seeing the number of pending home sales narrowing compared to last year's levels is due to the fact that home buyers were faced with mortgage rates more than doubling in less than 1 year. And of course, at this time last year, back in June, July, and August, we had nearly all-time record highs for home prices. And those two reasons are the main reasons why pending home sales fell greatly at this time last year. They still are falling this year, but not the same rate last year. As you can see right here, here's the number of pending home sales compared to previous years. This again is kind of a mess here, but I'll do my best to kind of share this. So right here is 2023, and which is right in line with 2019. Above here's 2021, here's 2020, and here's 2022. So the level of pending home sales is below 2022, and of course below 2020 as well as 2021. But it is less in line with 2019's levels, and also still slightly higher compared to 17 and 18. They also discuss inventory levels as well as new listings by each of the 50 most populous metros here. It says inventory decreased in 39 out of the 50 most populous metros in the US compared to last year. However, some southern metros still saw a significant increase of inventory levels. So for example, in Memphis, Tennessee, they saw a giant increase of 30.7% compared to August of 2022 for the number of houses for sale. Also, New Orleans saw an increase of 29%, and San Antonio, Texas increased by 18.4%. Despite higher inventory growth compared to last year, though, most southern metros still had fewer houses for sale compared to pre-pandemic levels. In fact, among the 50 largest metros, only Austin, Texas, which saw a gain of 3.7%, saw higher levels of inventory this August compared to what was typical during this time frame in 2017 through 2019. So this means that 49 of the 50 largest metros still have fewer homes for sale compared to pre-COVID levels. And again, only Austin, Texas has reported an increase compared to historical averages. In regards to new listings this August, only Milwaukee, Wisconsin and Jacksonville, Florida saw a gain. Milwaukee up by about 7% and Jacksonville, Florida up by 4% from the previous year. Declines were greatest in Nashville, Tennessee, a giant decrease of 27.2% in the number of newly listed houses for sale. And after that was Cincinnati, a gain of 25%, and then Seattle, Washington, an increase of 24.7%. Also, just like I mentioned at the very beginning of this video here, houses on average are selling slower compared to the past couple of years, but still faster compared to pre-pandemic levels here. It says a typical house spent 46 days on the market. This is a time frame when a house gets listed for sale until they accept an offer from home buyer. Days on the market on average nationwide was 46 days this August, which is less than a week or about 5 days longer compared to the same time last year. So houses on average are taking about 5 days longer to sell compared to August of 2022. However, though, they're still selling about 13 days faster or about 2 weeks faster compared to the average August 2017 through 2019. Here's a chart showing just that because days on the market at 46 days is slower compared to last year and also slower compared to 2021. However, though, still selling faster at this time during 2017 and 19 when days on the market on average was about 60 days. Now it's only 46 days. Let's also talk about home prices as well. Realtor.com provides analysis regarding asking prices or listing prices in the US here, not sold prices. So it says the national median listing price dropped slightly to $435,000, down from $440,000 this July. However, though, it has increased by 0.7% compared to the same time last year, ending a 2-month streak of annual decreases. In June and July, asking prices decreased compared to the previous year, but this August they saw a gain of 0.7%. And the reason for this is this right here, due to the fact we have a lack of houses for sale of existing houses. They also discuss this housing affordability hurdle that home buyers are facing right now. So even though asking prices are relatively flat from a year ago, only up by 0.7%, the average monthly housing payment just increased quite a bit because rates have been increasing, going from right around about 5.5% a year ago. Now they're over 7%. So according to Realtor.com here, it says this August, the cost of financing 80% of a typical home, this means that if you're buying a house, you're putting 20% down. You're going to pay a roughly $417 more per month to buy an average price home today compared to a year ago, and that's an increase of 21.7%. This is a key takeaway regarding a lack of housing affordability because we can't have your average monthly housing payment increase by 22% in one single year and to have average wage growth at 4.4% and also inflation at 3.2%. Okay, let's change gears slightly here and talk about how each of the 4 major regions fared. This is a combination of the 50 largest metros here. So here's the Midwest, the Northeast, the South, as well as the West. Let's first talk about housing inventory. because pretty big changes here. The South only decreased by 1.5%, whereas the West saw a giant decrease of 31.5%. Having said that, though, every single one of these regions here are down compared to August of 2022, as well as new listings as well. New listings decreased the most in the West, down by 14.1%, and they also decreased by 12.2% in the South, and only decreased by 9.8% in the Northeast. Regarding asking prices were relatively on par with historical averages in the South, only increasing by 3.2%, whereas the Midwest, the Northeast, as well as the West were up by more than 8%. I also want to discuss this as well. This is very important to provide some context regarding, are the trends we're seeing right now, is this normal compared to pre-pandemic levels or not here? And the changes in prices here are just astounding here. Let's first talk about inventory levels, because for each of these 4 major regions, they're down by more than 30%. The biggest decrease of the number of houses for sale this August compared to the average August in 2017 through 2019 was a giant decrease of 61.5% in the Northeast. The West fell by 40%, the South down by 38%, and the Midwest was down by 52%. Regarding new listings fell by double digits as well. The West saw the biggest decrease, down by 30%, but not too far off was the Northeast, down by 28%, and the Midwest fell by 26%. Regarding asking prices, every single one of these areas here are up by more than 30%. The biggest increase is in the West, followed by the Northeast, the South, and then the Midwest. Additionally, houses on average are selling faster as well. 15 days faster this August in the Northeast, 11 days faster in the Midwest and South, and only 1 day faster in the West. Realtor.com also provided each of the metros as well regarding the stats I'm sharing in today's video, which I won't go over in today's video, otherwise this video would be 13 hours long. Instead, I'll provide a link to this article in the video description below if you guys want to take a look at a particular metro you want to find some information about. Anyways, thank you so much for joining me in today's video. I appreciate you. Hope you have an awesome day. Like and subscribe, and we'll see you on the next video.